Welcome to your personalized deep dive. Today, we're diving into a pretty wild day in the markets, November 14th, 2024, to be exact.
Yeah.
You sent over a snapshot of what caught your eye, and we're here to help you connect the dots between political headlines, market moves, and even some global happenings.
It's amazing how a seemingly small event can send ripples through the entire financial ecosystem. We'll unpack it all from tech to real estate and everything in between.
Sounds good to me. Let's start with something I know you've been following closely, the whole TikTok saga. It looks like President-elect Trump might actually be stepping in with a pardon.
Yes, you read that right. A presidential pardon for an app. It sounds strange, but this potential move really highlights how intertwined politics and business can be. And it could have huge implications not just for TikTok, but for data privacy and the future of social media in the U.S.
And I remember you were deep in the weeds on that antitrust case against Meta. Could this pardon throw a wrench into things there?
It's certainly possible. Trump's been pretty vocal about his dislike for Meta, claiming they're very bad for our country. So intervening in the TikTok situation could be a way for him to exert influence over the tech landscape and potentially put pressure on Meta.
It's definitely a bold move, and it'll be interesting to see how it all plays out. But speaking of Meta, I have to ask about Mark Zuckerberg's latest venture. Did you see this whole music thing? Apparently, he's released a cover of Get Low. I'm not sure if I should be impressed or concerned.
Well, let's just say it's not your typical CEO move. But hey, maybe he's just trying to add musician to his already impressive resume.
Right. Who knows? Maybe we'll see MC Zuck dropping beats in the next Meta shareholder meeting.
Now that's an image. But let's shift gears to a company that had a much smoother ride in the markets this week. Disney. Their stock surged over 6%, and it seems like their streaming services, Disney Plus and Hulu, are finally the stars of the show.
Yeah, it looks like they're finally turning a profit, which is a big deal considering their parks and movies haven't been performing as well lately. It makes you wonder if this is the beginning of a major shift in how we consume entertainment.
It definitely points in that direction. This success in streaming could give Disney the financial flexibility to invest even more in content creation, which could further solidify their position in the streaming wars.
That makes sense. But it wasn't all sunshine and rainbows in the market. Vaccine stocks took a hit after Robert F. Kennedy Jr.'s nomination to head the Department of Health and Human Services. I know you've been keeping a close eye on this sector, particularly with your focus on Moderna. What are your initial thoughts?
This news definitely sent shockwaves through the pharmaceutical industry. Kennedy Jr.'s stance on vaccines is well documented, and this appointment could have significant implications for companies like Moderna, Pfizer, and Novavax, especially for Moderna, considering that at one point, a quarter of their revenue came directly from the U.S. government.
That's a substantial chunk of change. It seems like this nomination has injected a dose of uncertainty into the vaccine market.
Absolutely. It's a situation that warrants close attention, as any changes in government policy or funding could have a ripple effect throughout the industry.
Now let's talk about another industry that always seems to be in the news. Automobiles. Tesla's Cybertruck hit a bit of a speed bump with yet another recall. This one makes it 6 recalls this year. And then there's Ford, facing a hefty fine for issues with backup cameras. It feels like every other day there's a new headline about car troubles.
It's true. The automotive industry is navigating a complex landscape right now. You've got evolving safety standards, the rapid development of new technologies, and shifting consumer demand.
And then you have a company like Advance Auto Parts closing stores, losing money, and somehow their stock is going up? What's the deal with that?
It's a bit of a head-scratcher, right? But it seems investors are looking beyond the short-term losses and betting on their long-term strategy. Maybe they believe streamlining operations, even if it means closing stores, will eventually lead to stronger profitability.
It's almost like they're getting rewarded for downsizing, which is a fascinating dynamic. It really shows you how different factors can influence investor sentiment.
Exactly. Sometimes it's not just about the numbers, but the story behind them. Speaking of numbers, we got the latest Producer Price Index report, or PPI, which gives us a glimpse into inflation. And as expected, it's still ticking upward.
Up 2.4% year over year in October, to be precise. But here's what I found interesting. The Fed isn't panicking. Jerome Powell, the Fed chair, even said they're not in a hurry to cut rates again. Does this mean they think inflation is under control?
It seems like they're taking a cautious approach. They acknowledge that inflation is still a concern, but they're not hitting the panic button just yet. This measured response suggests they're confident that they can manage the situation without resorting to drastic measures that could potentially disrupt the economy. It'll be interesting to see how this balancing act plays out. But while the Fed is keeping a cool head, it seems like some folks are still struggling to make ends meet. The number of unbanked households in the U.S. hit a record low, which is great news.
That's definitely a step in the right direction.
It is, but over 5 million households still lack access to traditional banking. Think about that for a second. No checking account, no savings account, no easy way to pay bills or receive a paycheck. It's a tough situation to be in.
It really is. And it sounds like the government is stepping in to try and bridge that gap. Do we know what kind of initiatives they're looking at?
There's talk of expanding access to affordable financial services, maybe even creating some kind of public banking option. But the real challenge is figuring out why these households remain unbanked in the first place. Is it a lack of trust in financial institutions? Are there barriers to entry, like minimum balance requirements? Or is it something else altogether? Until we understand the root causes, it's going to be tough to create truly effective solutions.
That's a really good point. It's not enough to just throw money at the problem. You have to address the underlying issues.
And speaking of things that need addressing, let's talk about the housing market. It seems like things are heating up again now that the election is over. Homebuyer demand surged this past week, which suggests renewed confidence in the market.
That's right. Redfin reported that homebuyer demand last weekend was at its highest point in over a year. It seems like a lot of buyers were holding back, waiting to see how the election shook out, and now they're ready to jump back in.
It makes you wonder if this is just pent-up demand or if it's the start of a longer-term trend. What are your thoughts on that?
Well, Redfin also mentioned that they don't expect interest rates to drop significantly anytime soon. So buyers might be feeling like there's no point in waiting any longer, especially if they're worried about prices continuing to rise.
That makes sense. But here's where things get a little complicated. New home construction is increasingly geared towards rentals, with investors snapping up properties instead of individual buyers. Does that worry you at all? It definitely raises some concerns. If investors continue to dominate the market, it could squeeze out individual buyers, especially first-time home buyers, who are already facing an affordability crunch.
So it's like a double whammy, rising prices and increased competition from investors. That's got to be discouraging for anyone hoping to buy their first home.
It is, and it could have broader implications for the housing market as a whole. If home ownership becomes increasingly out of reach for the average person, it could lead to a decline in demand, which could eventually put downward pressure on prices. It's a delicate balance.
It really is. It seems like every market we talk about has its own unique set of challenges. But let's zoom out for a moment and take a look at the global scene. The International Energy Agency, or IEA, is predicting an oil surplus next year, which could have some pretty big implications for energy prices and global geopolitics.
That's right. They're forecasting a surplus of 1 million barrels per day, which is significant, and they're pointing to two main drivers behind this anticipated surplus. First, we're seeing a decline in demand from China, which is a major consumer of oil. And second, the transition to green energy is gaining momentum, which is putting further pressure on oil demand.
So it's like a perfect storm for the oil market. Lower demand from China coupled with the rise of renewable energy sources. It makes you wonder what this means for countries that rely heavily on oil exports.
Absolutely. This anticipated surplus could have a major impact on their economies, potentially leading to budget shortfalls and political instability. It's a reminder that the global energy landscape is shifting, and those who fail to adapt could be left behind.
And it's not just the oil market that's experiencing some turbulence. Global stock markets also took a dip, with investors seeking refuge in the perceived stability of U.S. markets. Why do you think that is?
It's a classic case of flight to safety. When investors get nervous about global economic conditions, they tend to flock to assets they perceive as less risky. And right now, with economic uncertainties looming in Europe and China, U.S. markets are seen as a safe haven. The Stoxx 600 index in Europe is lagging behind the S&P 500 more than it has in decades, and major Chinese tech stocks have also taken a hit recently.
It's fascinating how these global events can ripple through the markets even if they don't seem directly related. It really highlights the interconnectedness of the global financial system.
It does, and it underscores the importance of diversifying your investments. Having exposure to different asset classes and different geographic regions can help mitigate risk and potentially enhance returns, especially in times of global uncertainty.
That's great advice. And speaking of diversification, let's dive into the world of crypto where things are always interesting. Bitcoin's dominance surged, grabbing a whopping 61% of the market share, its highest level since 2021.
And it seems the driving force behind this surge is the increasing accessibility of Bitcoin ETFs. Traditional investors are now able to gain exposure to Bitcoin more easily than ever before, and that's driving up trading volume.
Which makes sense considering that article you sent me about the potential of Bitcoin ETFs. It looks like they're really starting to make an impact.
They are, and this influx of traditional investors could be a game changer for the crypto landscape. It signals growing institutional adoption of Bitcoin, which could lead to greater legitimacy and potentially higher prices. But it also raises questions about the future of altcoins. Will they be able to compete with Bitcoin's dominance? Or will they be relegated to the sidelines?
It's definitely a question worth pondering. But while Bitcoin is enjoying its moment in the spotlight, let's not forget about stablecoins. They continue to hold their ground, with Tether actually being traded more than twice as often as Bitcoin.
That's right. Stablecoins offer a different kind of appeal, especially for investors who are wary of the volatility of the broader crypto market. Their peg to the US dollar provides a sense of stability that can be very attractive, especially in turbulent times.
It's like having a little piece of traditional finance within the wild world of crypto. And speaking of wild, we can't wrap up this deep dive without circling back to Mark Zuckerberg and his unexpected musical debut. I mean, who would have thought that the CEO of Meta would release a cover of Get Low?
It's definitely not what you'd expect from a tech CEO, but maybe he's just trying to connect with a different audience, or maybe he's just having some fun.
Either way, it's certainly a memorable moment. Yeah. And speaking of memorable moments, let's shift back to the topic of regulations. The FBI paid a visit to the CEO of Polymarket, a prediction market platform which seems to signal a crackdown on decentralized finance platforms. It definitely seems like the regulatory landscape for crypto is getting more complex, especially for platforms like Polymarket that operate in a bit of a gray area.
That's right. The FBI's investigation is a reminder that even decentralized platforms aren't immune to scrutiny. They're still trying to figure out how existing financial regulations apply to this new and evolving technology.
It makes you wonder if this is just the tip of the iceberg. Will we see more regulatory action in the crypto space in the coming months?
It's certainly a possibility. As crypto becomes more mainstream and attracts more institutional investors, regulators are going to want to ensure that everything is above board and that investors are protected.
That makes sense.
Yeah.
It's like the Wild West days of crypto are slowly coming to an end.
Perhaps. But even as the regulatory landscape evolves, the fundamental appeal of crypto remains. The potential for decentralization, transparency, and financial inclusion is still driving innovation and adoption.
And it's definitely a space worth watching. But for now, I think we've covered a lot of ground today.
I agree. We've gone from TikTok pardons to oil surpluses, from surging Bitcoin to singing CEOs. It's been quite a ride.
It really has, and who knows what the future holds for MC Zuck.
Maybe we'll see him on tour next year.
Now that's an image I'll leave you with as you dive deeper into any of these topics that piqued your interest. Until next time.